a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Aerospace and defense stocks seem to be doing well lately, so it only stands to reason that we would take a look at aerospace and defense ETFs as well with our ETF research director, Nina Mishra. So what's going on? Why are they taking off, so to speak?
Yes, so we have seen this rotation out of defensive areas into more cyclical areas that are more exposed to global growth and trade tensions. And that is because there is some optimism on the trade front, and global growth is also improving. Just a few weeks back, we had the inverted yield curve, and that uninverted here in the US and in other parts of the world also, interest rates have been rising, so there are less concerns about a global growth slowdown. So industrial stocks in general, they are cyclical stocks, so that is why they have been doing well. Financials, technologies, consumer discretionary, those are also doing well. So those are the main reasons why aerospace and defense ETFs have been rising. And then geopolitical uncertainties have also been going up all over the world.
Yes.
And that should result in more defense spending. Defense spending in general has been rising all over the world over the past few years. And with improving global growth, the aerospace side of business should also improve. And then last but not the least, Boeing. So Boeing, there was some news that Boeing may be allowed to resume 737 MAX deliveries next month. It remains to be seen. But
yeah, there's mixed news on that front.
Yeah, but Boeing shares gained on that news, so that was, and Boeing is a big component in the sector, so that is why also the sector has done well in the past few weeks.
I'm surprised that they didn't act as more of a drag on the sector than
It has been acting as a drag. In
really?
fact, other companies in the sector, they have done much better than Boeing, and that we will see that because of that reason, the equal weighted ETF has done pretty well.
All right, well, let's take a look at some of these that you want to talk about. There's the iShares U.S. Aerospace and Defense ETF.
So the ticker is ITA. It's the largest, most popular ETF in this space with 5.6 billion in assets under management, 42 basis points, and it is market cap weighted. And because of market cap weighted, you will get a lot of exposure to companies like Boeing. So let's take a look at this ETF. You can go to the quote page on Zacks.com. We have a report on this ETF. You can read that. Go to external home page from there. And you can look at the portfolio and other details for this ETF. And as I mentioned, it's a market cap weighted ETF. Boeing, being the largest company in the sector, gets about 21% exposure, and because of that, Boeing's woes, or Boeing's, if Boeing performs well, then this will get a better lift than others, and it would be weighed down by Boeing's woes if Boeing doesn't do well. Other top holdings are United Technologies, Lockheed Martin, and Raytheon. All these companies have done really well this year.
Then there is the SPDR S&P Aerospace and Defense ETF.
The ticker is XAR. This follows modified equal weighting, so almost equal exposure to components in the portfolio, but it tries to maintain a 40%, 40%, and 20% allocation among large, mid, and small cap companies. So you will not see a lot of small cap companies, which obviously increases the risk because 80% of the portfolio would be in large and mid cap stocks, but equally weighted. So not a lot of exposure to Boeing or other large companies. It is the cheapest in the space with 35 basis points in expenses, and this is also popular, 1.8 billion in assets under management. Now similarly, to take a look at the ETF, you can go to the quote page on Zacks.com, read our articles, reports, and go to the external homepage, Spider's web page for this ETF. Now,
sorry.
Yeah, taking a look at the holdings, you will see a lot of those familiar companies, some not too familiar companies because it holds mid-cap and small-cap stocks too, but you will see that the weights are almost equal for all those holdings.
Now my turn. Last but not least, the Power Shares Aerospace and Defense portfolio.
So the ticker symbol is PPA for this ETF. This follows a modified market cap weighting, and it has a much wider coverage than ITA, which is also market cap weighted. So it includes other subsectors within the wider aerospace and defense industry. It is the most expensive of all, 59 basis points, and over $1 billion in assets for this ETF as well. Now, again, you can go to the quote page, and using the link, you can go to the external home page, look for other details. Now, as I mentioned, it has exposure to other sub-industries too. So aerospace and defense is about 68% of the portfolio. Then you will see companies from other industries like IT consulting, industrial conglomerates, construction engineering, etc. Looking at the holdings, Honeywell, United Technologies, Lockheed Martin, and Boeing. So because of modified market cap weighting, it does not have a lot of exposure to Boeing like ITA.
And comparatively speaking, how do they stack up?
So this chart shows how Boeing's woes have affected the market cap weighted ETF. Now all three ETFs have significantly outperformed the S&P 500 ETF, which is up about 26% this year. But the Spider product and the Invesco product, they are up about 42% each, whereas the market cap weighted iShares product, ITA, has gained about 35% this year.
Okay, do you own any of these?
Yes, I hold the Spider ETF XAR in the ETF investor portfolio.
All right, well, thank you for that. Don't forget, always more ETF information is on our website, Zacks.com. And if you want to take a look at articles and commentary, you can go to the ETF section of the website, use the Funds tab in the top toolbar to help get yourself there. And if it's audio information you are into, well, Nina produces and hosts a weekly ETF Spotlight podcast that I'm sure you'll find interesting. That's on the podcast page of Zacks.com. Back to the homepage, all the way down to the bottom of that homepage, click on the word podcast, and it'll help take you there. And also, don't forget that you can take a look at Zacks Market Insights, buys and sell recommendations. You can view all of that from the various portfolios that we manage here at Zacks Investment Research. And you can also take a look into services that up to now have been closed to anybody except subscribers to those services. And you can do that for a limited time only, and it's only $1 to do that for a limited time. So don't delay. You may want to act right now by going to Zacks.com/promo for more details. With Nina, I'm Terry Ruffalo.